Hello everyone. We're ready to begin our session today. Can we all please settle down? Assalamu alaikum and a very good morning, ladies and gentlemen. My name is Nidal Ahmed and I'm head of business at InfraZamin Pakistan. It is my absolute pleasure to welcome you all to today's seminar on green financing via debt capital markets, organized by InfraZamin in collaboration with the Private Infrastructure Development Group, the Securities and Exchange Commission of Pakistan, and the British High Commission. We'd also like to thank our valued partners, Karandaaz Pakistan and the Pakistan Stock Exchange for their continued support. Today's gathering brings together an impressive mix of policymakers, financial institutions, investors, development practitioners, all united by a shared commitment to creating a vibrant green financing ecosystem in Pakistan. Let's begin this very important day with the recitation of a few verses from the Holy Quran. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم أرأيت الذي يكذب بالدين فذلك الذي يدعو اليتيم ولا يحض على طعام المسكين فويل للمصلين الذين هم عن صلاتهم ساهون الذين هم يراءون ويمنعون الماعون صدق الله العظيم. Can I now please request everyone to stand in respect of the national anthem. We now move into our key note segment of our event, where distinguished speakers will set the tone for today's discussion. For our inaugural keynote, I would request Mr. Zishan Khattak, Commissioner at the SECP, to please deliver his keynote. Sir, we're happy to have you here. Please, the stage is yours.
Good morning and assalamu alaikum to all. Just so you know, Mr. Akif was just called in at Ministry of Finance, so I'll do the honors. It's actually a privilege and honor to be part of this August gathering today. We at SECP, we encourage innovation and collaboration in financial sector. We believe that there's so much room, not only for banking sector, but for non-banking sector, particularly because this is where the democratization of economics and finance happens. This is where financial inclusion happens, and this is where the funds are funded into very critical infrastructure, development, energy, and education, all kinds of projects. So when we see something like that, it is very heartwarming for us. We support initiatives like this. We appreciate the kind of work that InfraZamin, Saudi Park Investment Bank, UK International, and they all are doing. So I would really like to extend my heartfelt thanks to all the participants today, the speakers, the organizers, particularly, like I said, InfraZamin, FCDO, PIDG, and the team of SECP who are here. I believe that today's conversation, the discussion, and the exchange of ideas will reaffirm the immense potential of capital market in driving green and sustainable infrastructure development. Through a rich exchange of global experiences, we have seen how innovative instruments such as green bonds, Sukuk, blended finance, combined credit enhancement mechanisms have transformed green financing landscape in our countries. I was just having a conversation with Mr. Rizwan Sheikh, and the way they have structured this project. It is not only effective but efficient, and we really look forward to seeing more products and services like that. And the collaboration, like I said, is the way forward, which will undoubtedly play a crucial role in informing the direction of the future policy reforms and driving much needed market innovation, particularly as we strive to strengthen green financing through Pakistan debt capital market. As we navigate this important journey, it is our shared responsibility, whether as a regulator, financial institution, development partner, or investor, to carry out these discussions beyond this room. We believe this is going to be a start of something. I always say this, it's always a journey, it's not a destination. We evolve and we create. Like I said, we must work together to transform ideas into practical, actionable outcomes that support sustainable growth and environmental resilience in Pakistan. Pakistan, our financial sector is developing. We may be at initial stages of development. We have made amazing strides in some sectors. I believe when there are problems, it brings in immense opportunities and potential as well. I believe at a grassroots level, even in financial sector, there's so much opportunity for everyone, for the end users and for the financial institutions as well. We as regulators, we believe that we have to create that enabling environment. For growth of any economy, I believe there are three steps. The first being the creation of tangible infrastructure. The second one being the regulatory enablement, which is to ensure that good products and services are there while ensuring the interest of end users are protected. So that is another one. And then there comes the private sector, which with the help of that infrastructure and the enabling environment, we are able to achieve big things for ourselves and the economy. So best of luck. Looking forward to this amazing engagement that we'll have. I see Maheen has also come in. I realize her flights was delayed. So best of luck and thank you very much, everyone.
Thank you, Mr. Khattak, for your insightful address. Our next keynote speaker is Mr. Philip Skinner, Origination Lead for Nature at the Private Infrastructure Development Group, whose work bridges infrastructure and natural capital to drive green development across emerging markets. We're delighted to welcome you, Mr. Skinner. The stage is yours.
Good morning, ladies and gentlemen, distinguished guests. Pleasure to be here. My name is Phil Skinner, as I've been introduced. I'm going to take you through a short presentation on green financing from an international perspective, bringing some of the wider group's perspective on lessons learned that can be implemented here in Pakistan. Just to perhaps give a bit of background to how some of the various speakers relate to each other today. I thought I'd just start with this brief explanation of the Private Infrastructure Development Group, how I fit into that and everyone else you'll be hearing from. Thank you. So the Private Infrastructure Development Group is a multi-government funded specialist infrastructure investor. We've been around for over 20 years now. The funders you can see across the top there, the most significant which historically has been the UK, and we'll obviously be hearing from the British High Commission later today. I work for the PIDG and I'm the natural capital lead as mentioned, but actually I joined in 2016 for Garanco, which is the guarantee arm of the group, providing guarantees to lenders who are investing directly into infrastructure projects. As part of my responsibilities, I was the country lead for Pakistan, and I've been coming here regularly since 2017. One of my proudest achievements is being involved with the establishment of InfraZamin Pakistan, for which PIDG has provided the majority share capital alongside Karandaaz, and Garanco itself also provides contingent capital. You'll be hearing clearly from Maheen as well later today, as well as some of the directors of InfraZamin Pakistan, of which I am also one. Does this work? Okay. It's nice not to be stuck behind the podium, so I'm going to use the mic. So the PIDG, as I say, we've been operating for over 20 years, over 240 infrastructure projects invested in over 40 countries. We've taken over $2 billion of funding from our shareholders. We've recycled that into almost $6 billion of investment commitments and mobilized over around $27 billion from the private sector in the process. Now that's the key point that's central to everything that we do. We are looking to mobilize the private sector. So it's a blended finance approach. So in all of our transactions, we are looking to bring in the private sector through a mobilization effect and also a demonstration effect. We've been investing here in Pakistan since 2012, 29 transactions to date across all 4 of the product types that the group offers: equity, guarantees, debt, and grants. Hopefully you recognize a number of the logos on the screen there for transactions that we have been part of. I think in total this represents over $230 million of investment commitments from the group, and when you add on top the mobilization ratios of roughly 5 to 1 that we achieve on our transactions, you get a sense for the impact that we've had. The PIDG places climate and nature at the center of everything that we do. So that involves not just applying a climate and nature lens to the way that we screen, due diligence, and structure transactions, but also in the way that we incentivize our investment activity through dedicated KPIs. As a result, we've been a pioneer in the development of green bond markets in various countries around the world that you can see on your screen here, where we've been the first investor in a private sector green bond in all of these jurisdictions. I'll be talking about the first green bond in East Africa, which is a student housing developer in Kenya later on today. So why are we doing this? I think the first perspective I think is most relevant for the audience in this room is to think about this from the societal perspective. When thinking about national climate mitigation and adaptation strategies, these instruments can be very effective at directing capital towards meeting those aims. It also builds capacity within the market itself to understand some of the climate adaptation risks, which are very pertinent, obviously, for Pakistan. As we all are well aware, Pakistan being one of the most climate vulnerable countries and economies on the planet, having capacity within the investment community to understand those risks can be promoted through these green instruments. It also increases market competitiveness. We're all we're all competing for capital, particularly in this new world where international aid flows are becoming more scarce. that it's important that you can demonstrate that you are ticking certain sustainability boxes to attract that capital. Then thinking about the investors themselves, using green certification methodologies indicates to an investor that the issuer or the borrower understands the climate risks that they face because they are being tested to a rigorous methodology. These instruments also rely on highly transparent use of proceeds because you want to know that every dollar invested is going directly towards a climate-related outcome. And it also enables those investors to meet their own sustainability objectives, which may be coming voluntarily due to their own desires. Perhaps they've got their sustainability funds, perhaps they're investing from, but it also can come from regulation, clearly. Then the issuers or the borrowers themselves, we see in more developed markets there is a pricing benefit from green certification. It's also supportive of internal capacity, again, on this point about understanding climate risks. And I point here to also impending regulation that is being adopted internationally through IFRS, which has come through the TCFD reporting frameworks and is being integrated now into the reporting standards S1 and S2. This is coming both voluntarily and through regulation across the globe. Lastly, there's a branding point, clearly. We know that there is increasing consumer demand that wants to invest and purchase and procure in an environmentally sustainable way. However, I can't talk about all these benefits without recognizing some of the commonly raised critiques, which you will, I think, be aware of, perhaps these three main ones that we often hear. They're expensive, it's all very complicated, and then there's the issues of greenwashing. But what I want to try and convince you today is that these hurdles are perhaps not as high as you might first think. Starting with the complication. Now, having been involved in a number of first-of-a-kinds now, we can confidently stand here and tell you that it's not nearly as complicated as it first may seem, and it's certainly not as expensive as it first may seem. A lot of companies are undertaking activities which would qualify for green certification anyway, and the additional cost of getting that verified and certified is very modest. There's also the impending reporting requirements that I mentioned, and there's a competition element. If you're not doing it, some of your competitors already are. And lastly, on the greenwashing allegations, which I think is very relevant for the regulators in the room, this is all about building a high integrity market. And when I gave a similar presentation last November to the State Bank in a forum like this, one of my key messages was hurry up with the green taxonomy. And I'm very, very pleased now coming back this April to hear that the draft has been released and has been positively engaged with over 700 responses we heard yesterday. So this slide is just to stress the point about the international competition for climate-motivated investment. I can speak very confidently from the DFI community. At PIDG, over the last 2 years, we have invested over 60% of our projects have been climate finance. And that is a number that we're looking to increase. And the simple message is that if you have two identical projects in two different countries, one has climate, is being certified to a sustainability or green standard, and the other isn't, that DFI capital is going to go towards the instrument that is green certified, given the way that the KPIs are aligned. Okay. And so Pakistan, I'm pleased when I was here in November was at 1 green bond. Thanks to the Karandaaz bond, we're now at 2. So we're making good progress, but we can see there's still a way to go. Now, I just wanted to take you through a case study. I mentioned the Acorn Green Bond earlier. This is the affordable housing transaction in Nairobi. Sorry, affordable student accommodation transaction. I lay out the different steps here to getting green bond certification to make the point that it was not difficult. So Acorn, as a property developer, wanted to follow this IFC EDGE certification. They were doing it anyway because they saw all the economic benefits in terms of reduced OPEX for their property portfolio. And I think this is a really pertinent example for the Pakistan context as well, because I think this is green buildings is a really, really low-hanging fruit for this kind of intervention. They needed a standard upon which to base the green certification. They followed the climate bond standard, which is sort of the gold standard, if you like, of green certification. And then going to my point earlier about clearly traceable use of proceeds, this followed very much a sort of project finance type structure with dedicated accounts that can be traced directly from the investors to the EPC contractor who's actually constructing the buildings. And then also you need to get these things third-party verified to add to the credibility. And they use the Danish outfit DNV. However, there was one problem. 3 years earlier, there had been some high-profile corporate bond defaults in Kenya. The market was dead. There had not been a single corporate bond issuance for 3 years. And so despite having all of these things in place, they still couldn't get the bond away. They needed one more thing. A guarantee. Garanco came in, provided a 50% guarantee to investors to cover principal and interest. And on the back of that, they were able to issue the first bond in 3 years. What happened next? The bond was an incredible success. It was able to launch in Kenya. It was listed on the Nairobi Stock Exchange. It was then dual listed in London. President Kenyatta himself, because of all of the publicity around this, came to London to ring the bell at the London Stock Exchange. So you can imagine all the branding benefits that Acorn got from this. You can see the response of the corporate bond market here. Dead for 3 years, the Acorn bond, then the pickup. You won't be able to read the text there, but I think that ends in 2021, 2022, Ukraine, interest rates shoot up, bond market dies again. But fortunately, the loan market responded, and we saw the first certified green loans in Kenya following this. So that's the end of my presentation. I thought I'd end with this short video, which was produced in collaboration with Acorn and the Capital Markets Association in Nairobi. And it's a nice illustration of the process that was behind this bond, the impacts achieved, and last year it was successfully redeemed as well. So it's a full beginning to end success story. But with that, thank you very much. I'll be around obviously for the rest of the day and happy to answer questions as we go.
Green bonds are debt instruments which of course raise proceeds which are applied towards climate-friendly projects. We acknowledge the fact that climate environment is very important to us. We look at issuance of securities which of course give us monies used for climate-related projects. It means we are caring about the climate and also environment.
For this inaugural green bond, we worked with two PIDG entities. So we work with PIDG TA, which provides technical assistance, and Garantco. PIDG TA came in first to provide technical assistance, a returnable grant that was able to fund the legal work and the structuring of the green bond. When that had been done, Garantco came in to provide a 50% guarantee on principal and interest to investors.
As ACON, the first thing we had to do was to make sure that we were able to meet the use of proceeds requirement, which meant that all the assets underlying that were going to be certified by the bond were actually green. And this had to be certified under a known or a global benchmark. So all our assets were actually certified under the IFC Edge certification, and Edge stands for Excellence in Design for Greater Efficiencies.
January of 2020, we went and listed it on the Nairobi Securities Exchange as the first listed project bond. And then a week later, we went and listed it in what is called the International Securities Market of the London Stock Exchange. Since then, we've raised a substantial amount of capital, actually more than 30 billion shillings from other investors, banks and DFIs, because of the credibility and the visibility that the listings brought to the bond, which has really helped us in our journey of building what is today the largest portfolio of student housing in Africa.
For me, it is the impact it has brought to those students who perhaps may not have had the hostels available as we saw in earlier years. It has also brought the awareness that you can raise a lot of money as long as you are dedicating projects which are green, and there are many projects which are green. And we're thinking they need to look at how this was done, and of course take that way so that they can raise monies which are very much available.
With the green bond, we're able to develop 8 properties, and we're now providing clean, safe, affordable accommodation to over 7,200 students with a specific focus on the girl child. The other thing that we've also been able to do is to just create vibrant communities for our students, and this has actually driven behavioral change amongst them, and we're contributing towards raising future leaders for tomorrow.
Thank you, Mr. Skinner, for sharing your experience and a truly inspirational case study. We have learned so much from you. Now I invite Ms. Maheen Rahman, Chief Executive Officer of InfraZamin Pakistan, to deliver her keynote. Maheen, the stage is yours. Thank you.
Thank you. Do we have a presentation? Assalamu alaikum, everybody. Thank you very much to the SECP for having us here today to talk about green financing. I see a lot of friends in the audience. Welcome. And thank you very much as well to Farooq from the PSX, who's flown in for this on a slightly different flight from us. I'll talk a bit about what InfraZamin is about and what we've accomplished in the last sort of 3.5 years of operations that we've had, and why institutions like InfraZamin can really assist in certain areas of raising capital, which are currently considered market failures for Pakistan. So I get asked a lot, why the name InfraZamin? So infra comes from obviously infrastructure. Zamin comes from guarantor. So collectively you guarantee infrastructure, and that's the essence of the name and the work that we do. What's really the purpose? You heard Phil talk about the various different groups and entities and products that are involved with the PIDG group in bringing catalytic financing and patient capital to many different markets. So at InfraZamin, we effectively do the guarantee portion, and we do it in country and we do it in local currency. We have a predecessor, InfraCredit, which is based out of Nigeria, and we have another sister company which is being set up in Kenya by the name of Tamana. Effectively, what these in-country credit enhancement facilities are geared to do is to provide guarantees and investor comfort and bring projects which otherwise would not receive the same level of financing in the markets otherwise. So why do we have this problem in Pakistan? I think you as a regulator are well aware of the issues with regards to private sector credit. And if we look at 4 decades of lending, and if we start the 1980s and we go all the way down to the 2020s, you can see that our private sector lending to GDP has drastically dropped, while other countries in our neighborhood have actually seen a significant uptick. So we started out in the 80s very close to Indonesia, India, Bangladesh, etc., at around 25% of private sector lend to GDP. But over the years, you can see in 40 years, we have dropped to 17%. And these are state bank numbers. If I look at the number today, it's at 12% private sector credit to GDP. And when you look at the fact that banking sector ADRs are now very firmly in the 35 to 40% bracket, we see we have actually a market failure in terms of access to credit. And a similar story exists in the bond market, where in 2024, there were really just 2 issuances of long-term sukuks in the bond market as well. So clearly investors, or rather those who need the finance, are not able to get that from the bank or the bond market. So there is a big disconnect in the country. So how has InfraZamin impacted some of the work that we've done, right? So we've done 5 projects, and all of our projects have impact metrics that are linked to them. And if we look, I'll get into the which projects later, but if we look at the impact that we've achieved in about 3 years, I've got it on the slide here. So we've done 5 transactions overall. About 8 billion rupees of guarantees have been issued and committed by us, out of which 8.6 billion rupees of private capital has been mobilized. We've created approximately 7,000 new jobs during this time frame. About 1 million plus end users have benefited from this access to new infrastructure. We've also offset approximately 11,000 tons of CO2 emissions through our renewable energy projects. 30,000 odd women have benefited from the work that we've done as well. In terms of the agricultural space, because that's something that we're quite actively exploring, about 41,000 tons of additional agri-storage capacity through wheat silos has been created. 317 towers have been fiberized on the telecom front, and then so on and so forth, right? So when, how do we achieve, this impact, and how do we scale this impact further to be more beneficial for Pakistan in the longer term? So if I look at the projects that we've done, and these are all sort of project finance deals, so they take time to close and they take time to achieve the benefit that was intended for them. But I'll talk specifically about the 2 bonds, because there are obviously bank transactions in here, but what's relevant for the audience is the 2 bonds that we've done. The first one was in 2023 with Kash Foundation, and the second one is recently with Sunridge Foods in the agri-processing side. Now, what was the problem statement? Why did these project owners come to us for financing? What was it that the capital market could not give them otherwise? And so the first question was obviously rating. Right. So the average customer that comes to us is rated anywhere from BBB plus to A plus. So any BBB plus or A plus credit that goes to list a bond in the market is not going to get an uptick from real long-term investors such as asset managers, pension funds, insurance companies. They may find some pockets, but they will not get a broad-based flow there. Similarly, there are even projects that banks also refuse, particularly in greenfield areas or related to companies where limits have been exhausted. And for that issuance to happen, a credit enhancement was needed. So if I take up Kash specifically, Kash had done 2 previous TFCs in the market before us. Unfortunately, they were not able to get the result from the asset management community because of their rating, which was A minus. So what we did is we put 100% guarantee on the bond, and we then floated it to all capital market investors. We had over half the issue, was a 2.5 billion issue, over half the issue was subscribed by asset management companies. I think almost everyone participated. The other half came from insurance companies and other DFIs, etc. So all in all, they were able to attract in 33 different entities which they had never in the past worked with before, simply because of their rating differential. The other thing we were able to do for them was increase their tenor of overall borrowing, right? So because there's a credit enhancement and the guarantee will effectively cover the credit risk, the tenor of the bond and the pricing of the bond also improved. So we priced this at 1.5 over KIBOR. Their previous bonds had been in the range of 2.5 plus over KIBOR. So they got the benefit there as well. So that for Kashf, I think also because it was a gender bond, they were able to then post that, go internationally and do a $5 million international sukuk issuance under the same frameworks as well. So it did help open the doors for them in terms of subsequent financing. If I talk about Sunridge Foods, right? So when we started looking at Sunridge, we got terrible feedback from the market that this is not a client we should be working with, and the business inherently has issues, and we should really be very careful about guaranteeing them. It took us a long time to structure this one because of the inherent risks of the agri-business, but eventually we worked on optimizing the plant, developing greater storage capacity, and developing agricultural wheat silos for the institution, and we also asked them to put in renewable energy frameworks as well. We did this in sukuk format. It was a 2 billion issue, and it was, I think, subscribed within a month. So money that they had really been unable to raise from the market before came in very quickly, and we were able to close out the subscription of that bond as well. And the company is now awaiting disbursement of the same. So credit enhancement can significantly impact how an investor is going to view the bond's credit and risk reward analysis. The one thing a credit enhancement cannot do, which is also good to give that feedback, is liquidity. Because I think liquidity in the bond markets continues to be a concern, but the credit enhancement does help get over the issues of default risk for the future as well. So if I go on, so what's our learning from this? One of the key things that we realized, and we've also been having a few comments from the exchange as well, that why don't you list the bonds? Why don't you go for a straight listing? The sort of issues that the clients highlight are related around the cost of listing. They're related around the time taken to list. They're related around lack of control on pricing mechanisms if listings do happen. And I think those things are something we can sit down and try and address, because we do have further issuances in the pipeline that we'd like to actually bring into a listing model rather than a privately placed model. So what does the borrower think about? The borrower as such is looking for a new access to a market which they previously haven't gotten. But at the same time, if you look at international sort of best practices, there are a lot of incentives given to borrowers to think green rather than think standard. And some of those come around grant financing, some of those come around tax credits or tax incentives. There's also a fair amount of focus on fast-track approvals of green projects. So rather than taking 3 months or 4 months in getting approvals, standardizing the process and putting these things through in a much faster manner. There's also carbon credits, which is something we've explored with our customers, and accreditation, which Phil, etc., talked about. There's also a need to look at reducing the cost of bond issuance, because just the underwriting, placement, and arrangement fees can be quite substantial when you're issuing a bond, and larger for larger size bonds as well. What do the investors think? So broadly, investors are not aligned. Investors are agnostic. Investors are really looking at risk reward. For this level of risk, how much coupon are you going to give me? That's fundamentally the argument, and that's the debate that we have with investors. Investors such as mutual funds, insurance companies are not given any benefit of investing in green instruments. So they really are going to be very clear on the commercials of a bond and its transaction. And we've had that feedback from the market many times. So whenever we are trying to price a bond issuance or we're trying to place it in the market, we do it very much on commercial terms so that that equation doesn't come in. But if we are to really scale the work that we are doing, then the incentive framework for investors cannot be ignored. Now, however that comes through, there's again a number on the screen here. But for the banks specifically, lower risk weights also already applies on guaranteed instruments. Risk assessments need to be inclusive of climate risk, perhaps. That is something to be looked at. That's been implemented in a number of markets. And then tax credits, again, is what investors there are instances that we have seen, and I'll share the slide where, especially in our neighboring country, India, there are tax credits or there are, other offsets that you use when you invest in green products, right? So I think we have to talk a lot about the incentive frameworks rather than just focusing on one box, which is the risk versus the reward, which is where we currently are today. So I won't go into this in too much detail, but these are sort of the three types of climate finance: mitigation, adaptation, resilience. Pakistan has done very well on mitigation. We import solar panels, and there's an organic shift towards renewable energy. However, adaptive and resilient projects are still in, I would say, infancy at the moment. Our sort of green system is really sort of heading from our Paris Agreement, so I won't go into too much detail on this, but there is a creation of ecosystem loosely within Pakistan, but I think a lot of the ownership of where green should sit needs to be carefully looked at as well. I won't go into the details. I'm sure you're aware of the ministries that are responsible for green initiatives, etc. Let's talk a bit about the green taxonomy, right? So we've got SECPs up here, and we've got the state banks, which is in draft form here as well. We think this is a really good capture of how green projects should be looked at. And I think it's important when we take this to the capital market that we have clear direction as to if you are going to do green, then it should ideally filter into this, and then also that acceptance of green projects as investors should also be recognized and rewarded somewhere in the context of incentives also. So here's a slide I'm going to focus on. This really talks about what regulators have done in other parts of the world. This is both capital market as well as the banking sector. So I've got the flags of various countries around. Most of these are Asia-based. Some of this is in the EU. But obviously, the starting point is the taxonomy development, which has been done to a large extent by the SECP and is now being undertaken by the central bank. So I would imagine that both of those would end up in alignment at some point. There's also significant green credit guidance that is given to investors and project owners on how they need to adopt green projects. Climate-related disclosures are now mandatory in quite a few countries. So what are project owners doing in terms of disclosure of their climate impact projects? De-risking, that's in a number of jurisdictions. That's something we do as well. De-risking is quite central because climate risk is not always well understood in terms of an actual implementation or instrument. A number of countries have asked to include climate risk assessment into their overall risk assessment. And that's, I think, one aspect to really consider, because if we're just considering commercial risk versus commercial reward and not including climate risk, then we are kind of understating the risk on any particular project also. And there are models and tools on how to do that. Mandatory ESG risk management standards, reserve requirements, risk weightages, and I think the big one is obviously tax credits, allowances, and grants to bring forward green projects and have them close. Incidentally, InfraZamin has, I think we've given about 30 million rupees already, or maybe a little bit more than that, in grant financing to bring down the costs of issuing bond instruments. And that's predominantly went towards the one-time upfront costs of issuance. But naturally, this is not sustainable. You need to have issuance happen without those grant financing, and there should be larger schemes to allow for that as well. Okay, so where is Pakistan kind of standing today based on, sort of our history of operating here? As InfraZamin, we've done 2 bonds, but Garanco has done several more projects. So where are investors very clear? They're clear that the credit enhancement helps in addressing credit risk. They're clear that the credit enhancement brings in diversity. They're also clear that this aligns capital treatment and pricing to actual credit risk exposure. So these aspects have been broadly covered. Where are they confused, right? And this applies to now organizations which have significant long-term capital available that can go into infrastructure bonds, climate bonds, things like that, but for their own confusion are not able to invest or take that leap. So what's that? One, there is a legacy system of investment policies existing within the frameworks, which, despite there being no SECP restrictions, would still refer to those policies, and in those policies you may find that bonds, the credit enhanced bonds are not particularly accepted. So there are some entities which will look at entity rating, when in reality they should just look at the issuer rating. That, I think, is a key sort of problem child that has come up, particularly in public sector and long-term funds. Lack of guidance in general on how to treat credit enhanced instruments. Since we need to develop this as an asset class and scale up green investment, the private sector in some areas understands that guidance well, but when it comes to public sector funds, they don't quite understand whether or not this is something that's endorsable under their policy framework. So some clear guidance, I think, is really needed here. There's also no rating requirement on bank financing, and they can take it if they want to, but there's always a rating requirement on bonds that come into the market. So how do we make it beneficial for a project owner who's comparing a bond versus a bank? Why should he pick the capital market to come to if he's going to incur excess costs over here, right? So, and that just comes down to incentive structures. So how do we address this from a regulator's mindset? I think one specific guidelines on assessment and investment in credit enhanced instruments should be there for the whole market if we are to really develop this as an asset class. I think we should also look at the regulatory framework to encourage reporting on green instruments. So what benefit does an asset manager have to hold a green instrument? At this point, not much. But if we encourage the reporting of it, maybe we can then see how we can add benefit to it as well. I've already talked about tax benefits. We can also look at longer tenor instruments as well. I think one area that we've certainly seen is very helpful is looking at grant financing. So overall in this market, we've done almost 100 million rupees of grant financing. But I think this is something to explore further as to how those pools can be created to assist on certification and listing costs. And I think an overall review of the process and timelines of approval, both on the listing side as well as the privately placed side. So there are a number of areas we can work on to kind of push the needle forward on developing this as an actual asset class. These are just, and I'll share the presentation later to everybody here, but these are just sort of the regulatory supports for guarantor ratings that have come through in different markets, which you can then explore, and we're happy to address questions around those. So that's really it. How do you get to green capital markets? I think you start with the guidelines, you then have to develop the standards, the disclosures are important, the incentive structures are important. I think fast tracks approval would really help. And then finally, you must also have evaluation frameworks in line with outcomes. And what do we mean by outcomes? I think fundamentally there has to be a link back to impact creation under the HDI index, the Human Development Index. So when we look how we do every project is we link it back to which SDG goals have we achieved. And I think that's very important, because if someone is telling you that they're investing in green, then they should also be able to tell you which SDG indicators have been hit because of that investment as well. I'll stop with a small audience exercise here. So we recently did an agri-infrastructure sukuk. The proceeds were 65% to the actual plant. There was an installation of wind and solar, and there was a use of food storage facilities. Now, why am I exploring this as a case study? Is because I want to demonstrate how easy it is to classify something as green. It's not complicated. But do you think we went for green certification, or we could go for green certification on this particular instrument? You can raise your hands if you say yes. Some very tentative yeses. Yeah? So yes, we can. Why can we? Because look at what the impact creation is, right? So you've got renewable energy, you've got climate change resilience because of food storage, you've got energy efficiency because of plant operations, and then you have clean transport, which we didn't have within this as another sort of framework. But broadly, we could go for green certification on this bond as well. But that's how simple it is actually to create the green structures within a project. So, I would really encourage all of you to consider how we can get both the project owner community and the investor community together to encourage many more bonds to come through this form of financing, avail much longer tenors and better pricing through either credit enhancement or blended finance or any other such areas that we can assist in. And InfraZamin is here. We're happy to help. We're happy to support. We are commercial, but we have a development lens here. So hence the need to be involved in these discussions. Thank you very much. I'll stop here. And thank you. Happy to address any questions later. Thank you.
Thank you, Maheen. Next, we welcome Mr. Farooq Sabzwari, Chief Executive Officer of the Pakistan Stock Exchange. Mr. Sabzwari, we're honored to have you here. Please.
Still morning. Good morning, ladies and gentlemen. See a lot of familiar faces in the audience. So we came in via PIA, international airline. And my colleague and I think he's part of the panel. I don't see him around. I think he switched to plan B. Oh, you are. So plan B was to pretend that the flight clearly did not take off and to tell the Karachi walas that we are in Islamabad, tell the Islamabad walas we are in Karachi. And so plan B, clearly. So thank you, PIA, firstly, for bringing us here. Thank you, InfraZamin, Maheen, thank you very much. SECP, I see the chairman sitting there, Commissioner Saab, thank you very much. The UK International Development, Private Infrastructure Development Group. Thank you so much for putting this event together. I will reiterate right at the forefront, it's events like these or collaborative efforts like these which will help us accelerate our progress towards a greener, more sustainable future. That's a fact. And every time we discuss even small things like the green bond, which is the Parvaz green bond with potential investors, I kid you not, it's really education, advocacy, joint collaboration, which is what will work or continue to work. So I'm really thankful for all of you for putting this together. I thought I'd use this platform to just rattle off a few quick thoughts because we are in some reset mode even at the PSX. This is my 5th month as the incoming MD. And we're reflecting on everything from the investor base to listing companies to obviously ESG initiatives and ESG index. We're talking to various countries and jurisdictions, getting knowledge or gaining knowledge via MOUs on what their platform offers and how we can, in some cases, copy paste our way to stardom. So the table, Philip, you just showed, hopefully in a few months from now, Pakistan on the green bond issuance side, given the traction I'm seeing post the Parvaz green bond issuance, both from corporates and then obviously the government itself, that number will hopefully be a better number. But I thought I'd just also reflect, because we are constantly in touch with our partner, which is the London Stock Exchange. They have a product, Refinitiv, where you can self-score yourself. So there's a contributory tool where you put all your parameters and it's a self-scoring mechanism. Not doing all that well, it's not gained as much traction as we thought it would, but we continue to deliberate with them. The second session we had with them was a week ago. So some numbers coming out of that session. Obviously, in terms of issuance, it's doing well. So the green bond issuance internationally. Even ESG, the growth is 17% both in the green bond space and in the ESG space. The one thing that's catching people off guard is fund flow. So if you'll notice, this is the first month you're actually noticing outflow in Europe. Obviously, when the US catches a cold, and that's been seeing outflows in the ESG space in terms of fund flow for 8 or 9 months now. A combination of a number of things, the latest being the change of guard in the US. So they've caught a cold in terms of diversity or the talk on diversity, and Europe is sneezing as well. So you've got the greenwashing rules which are due. There's been some mergers and acquisitions around the European fund space. And as I said, 335 odd products have changed hands in the last few months. So clearly this landscape is still evolving. I just thought I'd pinpoint that. Before I go to point number 2, which is the lay of the land at the PSX. So yes, rightly put, both Philip and Maheen rightly pointed out, the problem may be ratings, the problem may be liquidity. It's a combination of both. It's also a problem of awareness and educating the corporates at large on why listing at the PSX can actually be to their advantage. So 24 privately placed instruments listed at the moment, 13 publicly issued debt instruments, clearly too few and too far between. So just like everything else, whether it's our startup board, which we are kind of reopening, whether it's things like ESG index, which we are now working with other jurisdictions on, we're trying to copy paste what other people have done successfully and what fits our sort of profile. Just on the same score, we're looking at the debt market similarly and looking at PO regulations, ratings, our cost base, what it takes to be a listed instrument. But then I would want to point out, thanks to the green bond guidelines, I've already mentioned Parvaz, but what I haven't mentioned is the government's also on this bandwagon where a green sukuk is in the offing soon. So I think the launch is mid-May. The investor roadshow was last week at the PSX. That will be a PSX listed instrument. And talking about PSX listed instruments, I do want to mention what we are doing on the Islamic space, because there is clearly some convergence, Islamic investments, responsibility in investing, and then ESG. That convergence, I want to just point out that in Pakistan, not many people know, that 80% of our daily turnover on the exchange is in Sharia compliant instruments. And since the year and a half ago, we've listed 19 odd auctions out of the government, and 3.25 trillion rupees worth of sukuks are now listed on the exchange. The big complaint really around the table has been liquidity and the investor base. We've done a number of measures to try and increase that liquidity. So the good news for you is today 3.25 listed on the exchange, 3.25 which are state bank issued, which are over the counter trading. And in April, there are 3 or 4 days where we've actually, the volume on the PSX has been higher than the volume on the OTC market. The usual average was 1:10. That's now stripped down to 1:4. And clearly we've got catch up to do. But the good news there also is if you drill down to who is active, then even if fund managers are active, that basically tells me they're active through the broker community, and obviously the investors are retail investors. So clearly this is something that is picking up and doing well for us. I've already talked about the principles of Islamic finance and why we continue to focus on ESG. Green bond issuance I've mentioned. But one other thing that I want to just pinpoint, when we started this journey, I think there were only 20 or 30 odd recipients who responded. I'm talking about the gender pay gap. Where if you look at that number today, so a year down the line, that number is now up to 340 odd responses. So out of the 540 odd listed companies, we've got responses from 340 plus. And to me, that's a really good sign. What that tells me is the continuous pandering of these corporates, writing to them every once a month, reminding them that today may not be mandatory, but you need to honor this commitment. So we are getting these responses back. We've shared the data with SECP. Why it's not full 540 is because June is the year end for the remainder of the 170. So I think that number will climb up to 540, and we'll hopefully have a number to present to the SECP once that happens. So that's the good news. Even on the contributory tool, which I mentioned, the London Stock Exchange, we started with only 10 companies, and there in the webinar a week ago, we had 40 participants. Again, these are small pickings, but you need to understand where Pakistan was in terms of issuance, which was showed by Philip, we have a lot of catching up to do. ESG index, we like what we see when we look at the Thai market. So SET has a perimeter. They have a very effective ESG index. We're looking at that thoroughly, looking at their calculation methodology. We think that's something we want to mimic. Again, we will be coming back to the SECP with the data. But it's all very favorable feedback that I'm bringing you from the exchange. I'm reminding you this table will hopefully look a lot more different in a few months from now. Both corporates and the government bonds are coming, and the Sukuk space is a space that continues to grow as well. So thank you very much for inviting me. Thank you very much for your listening.
Thank you, Mr. Sabzwari. I would now like to invite Mr. Akif Saeed, Chairman of the Security and Exchange Commission of Pakistan, to deliver his keynote. Sir, please, the stage is yours.
Bismillah ar-Rahman ar-Rahim. It's never pleasant to start a speech with an apology, but one should not shy away when one is due. I was supposed to be here at the opening. Unfortunately, I was called for a meeting. But a commitment made to Maheen in terms of being present here, being part of this critical topic, something when it comes to debt market as overall. I strongly believe that's the key to the growth of the investor base and the wider participation when it comes to the Pakistan Stock Exchange or the overall capital market. So debt market is something very close to my heart, and of course, as a subsegment, the green financing, given our peculiar climate vulnerability, it's something which we need to work more closely. Formally, Assalamu alaikum to everybody, particularly Maheen, InfraZamin, PIDG, plus UK International Development and my colleagues at SECP. Privileged to be here on this very critical topic in terms of green financing via debt capital markets. I think I'll echo what Farooq Sabzwari said at the outset. Whenever it comes to a new topic, be it ESG, corporate governance, green financing, the role of such collaborative events and awareness should not be and cannot be understated, because tendency is the regulator should make it mandatory. The regulator can do this and do that, but I think ultimately it is the acceptance of the market which determines the ultimate outcome or success of any such event, be it Sharia compliance as we speak, because people will find ways if it is forced upon them when it comes to governance, the green financing or Sharia compliance. Pakistan, as I touched on earlier, is a country which is very much vulnerable because of urbanization, dependence on fossil fuels, population growth. So to counter this, every step has its own role. Green financing bridges this gap at the scale and the speed required in terms of awareness and in terms of the financing itself. I think while talking about green financing, I'll also touch on the credit enhancement, InfraZamin's role. I think it's a new concept for the Pakistani capital market and the financial sector in general also. I think we need to talk about that also, why it is InfraZamin which is actually holding this seminar with SECP and other partners. I think this is an opportunity for the corporate sector to take benefit of what InfraZamin is offering, and at the same time the financial sector lenders, be it mutual funds, insurance and the banks, to understand how does the credit enhancement plays a part and what it brings in addition to credit enhancement. So in my personal view, they bring in a screening mechanism as well. So their oversight, their review and their per se name lending, not in the actual sense but on a So that gives comfort, that should give comfort to the market as well. Apart from credit aspect of it, they have gone through the whole, the green financing, the green part of it. So that should give confidence to the market. I think across the Pakistan and other emerging market, we are seeing a trend towards focused bonds. Pakistan saw about a year and a half backed by InfraZamin, the first gender bond, followed by now green bond by Karandaaz Financials, and now as Farooq Sabzwari mentioned, the government of Pakistan is also is in the process of issuing its first green bond. SECP has issued guidelines way back in 2021, but guidelines have to be tested, and this is where our role comes in to interact with the market, to the issuers and to the lenders or the investors, whether the guidelines need to be reviewed, need to be enhanced. It's a process which has to continue. Briefly, at SECP, at PSX, I believe 33 issues are listed, Sukuk issues are listed. Out of those, 9 which started as publicly, roughly about 57 billion, whereas privately placed, which later on came on to the PSX, were 24 and 506 billion. So that's something which was presented to the Commission, and we looked at it very closely. How come issue which is privately placed and later on comes out at the PSX? We have started a process close to concluding that with a basic objective that the issuer should be indifferent whether it is listed or unlisted, and the two areas which we have worked on is the cost and time. So the cost to the issue and time to the issue. What we are working on, and we'll try to as much possible to reduce both these things so that the issuer is totally indifferent when it comes to taking a decision between listing and unlisting, because there's a strong demand for Sukuk. So we believe that wider participation is required, and for that, ideally speaking, all should be listed to begin with. Major development which took place again December 23 was listing of, or the auction of government GOP Sukuks via PSX. Up till now, roughly 19 auctions have taken place, close to 2.34 trillion have been raised. I think that was the easy part, if have to look at it, because the critical role is the secondary market part. And Imran Bhatt from the Securities market is sitting here, his team under the guidance of the Commissioner Abdur Rahman Badaich. They have interacted with the market. We have addressed few issues which came in terms of the secondary market. For example, the banks have allowed to trade at the prop book directly. Now the Sukuks auctioned at PSX are eligible for OMO as well in CDC. Must appreciate the support provided by State Bank of Pakistan. In addition, I think that we have moved from T0 settlement as well. And the last bit is the cost itself has been rationalized to bring at par with the State Bank led auction. So I think test would be, we are seeing results in Feb and March. The secondary market data or the activity has picked up. We need to make a further push and create awareness. Interest has come in from a couple of banks to actually go for digital only GOP brokerage license. I think if that happens with the dwindling or declining Sukuk outstanding done through State Bank and increasing availability at PSX, we will see a lot of liquidity being generated there. But ultimate objective is not just the Sukuk, it should be that the conventional bond should also be routed through PSX. We believe it's much more efficient, transparent, confidentiality is much better, and I think a wider participation is possible through PSX rather than through the banking system. SECP in terms of green has, apart from the guidelines, we have issued ESG guidelines as well, and our approach has been to make it voluntary, to create awareness, must touch on the role played by ICAP and UN Women in developing these guidelines and creating awareness all across Pakistan. And of course we have ESG Sustain as a portal, one-stop or repository in terms of the compliance with respect to ESG, and more importantly, showcasing the steps taken by different corporates. So anybody from the corporate sector who have not visited ESG, I'll strongly suggest and recommend that they should visit, and if they want to showcase their company there, they should actually showcase their practices. That will actually, my personal belief in when I started at the outset, I also said the governance and ESG are something which has to be by own will and the peer pressure from the market in terms of, okay, if they can do it, I can do it also, rather than through a regulatory compulsion, which invariably taken to as a box-ticking exercise rather than something which is done from the heart. Lastly, I think we need to be aware that international sustainability standard boards has issued S1, S2 standards. We have taken a phased manner approach. Companies need to be aware of it. Time passes very quickly, and the earlier they start, the better it is, particularly on S2. So which is the climate-related disclosure standards. PSX has taken a number of measures where London Stock Exchange provides a benchmark. It's a voluntary, but you can judge for yourself where do you stand and what needs to be done. I think one more area which I noticed when I entered the hall was quite a few journalists sitting here. I think that's very encouraging to see that the media, particularly the print media, is taking interest in that, because they need to be a partner when it comes to creating awareness, not only in the corporate but in the general public as investors. In the end, I hope that this session leads to action-oriented conclusions. I, on behalf of SECP, make a commitment in terms of whatever needs to be done at our end. We are fully committed, as long as investor protection and the cost of compliance is within the limits, and which should be encourage the development of the market. So I think as far as SECP is concerned, I believe Jashan Khatak Sahab would be concluding the session, but as far as the Commission as being the chairperson, I would make this commitment for the audience and the overall, particularly the credit enhanced, the overall debt market, specifically credit enhancement, and within that the finance, green finance. So anything which we can do, please do. Our doors are open. We are very willing to look at it objectively and for the market development. And thank you for inviting me.
Thank you, Mr. Saeed, for your insightful address. We now move to a very special segment, a conversation with Hock Khoo, Chairman of the Board at InfraZamin Pakistan. With nearly 30 years of experience across project finance, bond rating, structured finance, and private equity, Hock has been instrumental in shaping the guarantee landscape across Asia. He played a pivotal role in establishing Malaysia's first financial guarantor, Dana Jamin, and was the founding VP of CGIF, a guarantee facility of the Asian Development Bank, where he built a robust US dollar 1.6 billion portfolio across ASEAN. He also served as a key advisor in the establishment of InfraZamin Pakistan. This important conversation will be moderated by Maheen Rahman, the CEO of InfraZamin. Okay, almost there. So the conversation will revolve around the topic on how rupee bonds can power Pakistan's recovery. Please join me in welcoming Maheen Rahman and Mr. Hock.
Ji, Assalamu alaikum. Thank you everyone again. I've got Hock here, who's chair of our board, and I can tell you he has been instrumental in really shaping how credit enhancement has evolved in the country. Hock also worked at Dana Jamin, where he was the founding member of that entity. which helped create the entire credit guarantee framework for the Malaysian Sukuk market. So I'll dive right in. Hock, you've worked in multiple Asian markets. How would you assess today Pakistan's readiness to use its local bond market to finance infrastructure and green projects? And what do you think the factors are that kind of support that development? And it's obviously engagements like this that help bring all the relevant parties together.
Thank you. Thank you for this opportunity, Chairman Saeed, and your colleagues and partners for this conference. Perhaps just to start, I want to caveat that the comments today is less of the chair of InfraZamin's board of directors, more of Hock. Sorry, can you hear me? Okay, more of Hock and his scars and bruises traversing Southeast Asia, including Malaysia, with respect to trying to develop local currency bond markets. Probably almost 20 years of my career trying to do this. I realize they don't teach bond market development in universities. It is quite a unique area. They do teach bond market and bonds, but not bond market development. So I want to start out really by not meeting your expectation of trying to talk about Malaysia, this and that, right? But really to start out with a very basic understanding of how bond markets develop. They tend to start from wherever they start from, right? So one country will have the foundational setup, and this differs from another. So while I talk about Malaysia, I want to also caveat that Malaysia is an oil-producing country, and we have huge, high savings rates. Salaries of every person is tracked 21% every month until they are 55. So I've just turned 55 and I've been able to withdraw 21% of all my working career, which compounded with good investments, compounding at about 4% over the years for my retirement, right? Those long-term savings trapped institutionally in Malaysia by Employee Provident Fund underpins the bond market in Malaysia in local currency. So Maheen, your slides earlier showed Malaysia very high in private credit to GDP. Very strangely, top 1 or 2, 118% of GDP. That explains where we start from, right? So when I go to many countries in Southeast Asia, and as we do in Pakistan, the reality is we've got to look at the savings, right? And people tend to tell me, oh, we don't have these savings. No, you have savings. It's just in different forms and different buckets and different regulations, whether it's a bank or whether it's asset managers. So I think policymakers and in each country will need to look at the foundational savings pool. There are savings here. Now, where are they parked? How are they going to be mobilized more efficiently? With some prodding, because if you leave everything to the commercial sector, they tend to gravitate to low risk, high return, right? So to balance out, and I'm not here to say that immediately we have a total balance tomorrow, but you then look at where you start from today and start building the savings pool and the investor base, right? Development. So after 7.5 years, I told my CEO at Credit Guarantee and Investment Facility, developing bond markets can be summarized in one word: developing investor base, right? So if you start from that, because there's always people wanting to borrow money, so you don't need to develop borrows. You've got to shape them with respect to green and all kinds of framework, but really, if we want to start with the foundation of bond market development, is to look at the savings pools. There are savings here, how we can try to move them attractively with very efficient means, very little friction, very little restrictions. And then the risk-reward propositions throughout the whole financial sector become more balanced, and we'll have, you're off to the races. So one point about readiness, you're never ready to start something new. So always start it. Because it's not like the Olympics where you train and then you're ready to start the race. So you're never ready for a green bond until you do the first green bond, right? But having said that, I'm mindful that in a room full of regulators, the onus of duty and due care is important. So perhaps when we talk about something new, a sandboxing approach will be needed because regulators need to take care of the whole market. But then again, you don't sign up for a marathon without shoes tomorrow, right? So duty of care is there, but then when you talk about readiness to try something, it's a long answer, but I also want to say InfraZamin stands ready to be that agent of change. We try to make things happen, and then from then we can feed back both to regulators and stakeholders so that we can bring the market forward in the future.
Well, thank you. So just as a follow-on from that question, when we look at the pools of saving that do exist in Pakistan, and you have insurance companies, life insurance companies, you have state pension funds, you have provident funds, you have asset management companies, and they traditionally do have a fairly stable long-term pool of capital available. The challenge is asking them to think beyond the 6-month, 1 year, or 5-year space. Some of that is related to regulation, some of that is related to liquidity, as we've heard. But I think getting the market to think more on longer tenor and price longer tenor appropriately, because effectively when you're trying to do infrastructure, you need 10 years, you need 15 years of financing. You can't do this in 3 to 5 years. So how do we help in shifting that process, or using that process to shift the thought process of the investor community to thinking much longer term? Because as you've heard, the sukuk numbers are impressive. They're all government sukuks as well. However, the tenors are not where we want them to be. So how do we shift that mindset?
Yeah. So continuing on my first response, right? Developing investor base. So basically what we're looking for, developing pools of investors with different risk appetite and tenor appetite, right? The entity that tracked my savings for 21% all through my career can buy a 30-year bond easily, project bond. And they don't want to buy a 30-year government bond because that would not yield enough to ensure my retirement. So that mindset is very clear. So when I was 21 years old and started working, 21% of my money was in their hands. So they had the right mindset to say, I can buy a 30-year bond for these cohort of funds, right? So that's one. And again, different savings and investor pools have different risk appetite. So tenor and risk have a correlation. I would say that in Malaysia's case, we build a very large bond market, a corporate bond market of almost 50% GDP, with another 55% of GDP for the sovereign. So 100% over of GDP bond market. And the corporate bond market, I would say, is AAA, AA local currency rating, and we lost single A along the way, and we don't have triple B. So if you look at the composition of risk in Malaysia's very large bond market, which includes project bonds, bank sub-debts, and corporates, they are skewed this way from a risk rating profile, very, very safe. So we're not like the US or developed markets where very few triple A's, and then as you go down, and there are a lot of triple B's, and there are even more junk, right? Those are a mature market profile. But I am of the belief that every emerging market would not get there and should not get there, because if you're looking at the capital markets serving the country that's developing, it would start this way. So go create strong bonds, right? And a lot of it has to do with guarantors helping, right, to build the confidence, but we'll talk about that later. So we need to do everything possible, both regulators and stakeholders and guarantors, to ensure that bonds are a very safe proposition, right? If you want more returns, go to equity, right? Bonds is not the hedge fund kind of returns where you trade, right? So that's the Malaysian experience, and once you do that, then investor right? My savings that I trapped for 20 over years. Life insurance is the same. I call it grandma's money, right? You know, you don't put a grandma's money on the hedge fund in terms of risk appetite, right? So there are, of course, funds that you can create, pools of funds for those assets, right? But bonds need to be marketed to a very specific pool of investors.
Right, no, absolutely. And I think leading from your point, Pakistan's case has been in 2008 all the way to 2011, we suffered tremendous bond defaults. Some of those were restructured, some of them were not. And I think that has really scarred the market in terms of bonds not being safe, right? So one aspect is that. So how do you think, you know, we have InfraZamin here, we are doing credit enhancement, but how can we scale this to you know, to really create that safety net for bonds so that that perception changes? And that perception, I assure you, has been carried forward a long, long time. And it is because of that that you see maybe a maximum of 10 to 12 issuers in the market, predominantly the financial sector, right? Because those bonds are considered safe. But if we're going to encourage others to come, then we have to create that safety as well.
Yeah, so to answer that question, perhaps maybe one step back to try to address a lot of misconceptions about a guarantor and a guarantee, which I'm not sure if that misconception occurs here, but everywhere I go, people say the guarantee is a de-risking tool. Partly yes, right? If you don't get paid, the guarantor pays, so my risk is lower. But the risk is transferred to a guarantor, and if the risks are unacceptable, the guarantor cannot be sustainable taking that risk. So the guarantor is not de-risking purely for the purposes of providing the guarantee as a skin. Behind the guarantee that we issue is a credit solution, right? So the guarantor can get comfortable to issue the guarantee because of certain actions behind it. And there's no secret, I'm happy to share that here. We filter 3 steps. We filter. We then intervene with structuring. What we like, what we don't like, risks are here, the residual risks we can accept, some we cannot. So within an immense amount of structuring, we get comfortable and then we issue the guarantee. So what stakeholders often see is the guarantee, but they don't see the innards, I call it. Then of course the third step is we monitor. And when things go wrong, we would be the instigator of restructuring. And we'll talk about restructuring a bit later, but these are the 3 key steps to allow the guarantor to be able to take risks that the market players are not, right? So a bit of misconception, Buhok's crazy, how come he's guaranteeing this company, right, in Cambodia, right? Or in Vietnam at that point in time. But there's a process to it, and when you talk about scaling, coming back to your question of scaling, we are an agent of change, not with the intention of guaranteeing the whole market. We don't have that capacity. What we want to do to be the agent of change to guarantee 1 or 2 transactions, and then hopefully we'll be, I wrote it down here, we're here to open pathways, not to be a permanent crutch for the investor base. So if we lay this perspective on all of us, regulators, market players, and intermediaries, then we can design, you know, a plan, a pathway to bring the whole market forward that, well, in the interim, let us deliver that credit solution, and then the market will pick it up, right? And a way to do so is this, and we've tried this in my past experience. So Sukuk investors are very edgy. I want 100% bond guarantee. Or 90%, no. So, okay, 100%. Then we're doing a couple of 100%, and then people start complaining, you're distorting the market. Buhok, you're distorting the market. And then I said, no, there's no market to distort here, right? But I'm setting the standards, and then we then move to a partial guarantee, which is quite easy to do with banks because they know the client, they can do it. But for a capital market, for the bonds, it's quite hard to do partial guarantees, right? The investor need to understand the underlying rating, this and that. But how we've addressed that is we've taken an intermediate step where we will guarantee the longer end of the bond, the longer tenured parts of the bond, 100%, and then there may be a shorter term bond that goes out to the market. And market players invest without the guarantee for their tranche, but with full confidence that the longer end tranche has been filtered, structured, and is still monitored together with the shorter end tranches where they can gain benefits. So their bonds may not be, monitored, right? But it still is. Like, we still monitor all tranches, right? All tenors. We still structure the whole transaction. We still filter the clients better. So you can buy a naked or unguaranteed bond on the shorter end, provided that the guarantor has done their work to safeguard you. And you can earn the premium. The guarantee fee doesn't have to go to us. We just take the longer end, right? So that's a good example. Of course, our aspiration is ultimately they'll say, Maheen, we don't need the guarantee. We like all your structuring, and we'll do this without the guarantee. When that happens,
that's the ultimate aim.
It's a celebration for us. Get yourself invited to the closing dinner.
Yeah, absolutely, yes.
Right?
Okay, so when we talk about bringing in stakeholders and looking at regulators or looking at other areas of public sector that have their own certain goals, and then you have the private investor that they have their own goals. We've had InfraCredit that has been around for almost 10 years now. We've had InfraZamin about 4 years in. We've had Damana. We've had Guarantco. How do you see these credit enhancement facilities have really been the bridge between the regulator, the investor, and how do you see that contribution in Pakistan?
Yeah, so as I mentioned, we're never ready to do something new, right? So, and it's usually the guarantor who says, okay, I'll do something new. And I've explained, we're not crazy. There's a process to getting something new done, right? And I like events like this, and we should do more. Once we do something, we want to tell people how we do it, right? So there's a skin that everybody sees, the guarantee. There is a whole bunch of innards, which I call a credit solution, how we structure and all that. And this is very pronounced when you have a guaranteed tranche and an unguaranteed tranche, because the IM, or Information Memorandum, speaks about everything. But sometimes when you read the IM, you don't see the tricks of the trade. But you have forums, and you can investor days, and these can be public, right, even, so that people can understand how the credit solution was arrived at, right? It could be instilling governance, right, in a family-owned company, and sometimes in the jurisdictions in Southeast Asia, sibling rivalry is quite pronounced, and it's a risk factor. Always show up in my credit reports. But then how do we do sibling rivalry risks, right? We instill, certain recommendations, and if it's accepted, then the guarantee becomes in play, right?
Yeah. And I think the last point that I'll have is we are taking on riskier projects than perhaps the market is willing to absorb. What do you do in the case of debt restructuring? Because there will be defaults. It's inevitable. At some point in time, you will have a call on the guarantee. Of course, you service that through your capital, through the investor is protected. But also in terms of broader confidence in developing the bond framework, you do need to look at debt restructuring options, solutions that exist in the country. And that's a very important part of the legal framework as well. And banks are also troubled by it, asset managers, insurance companies, everybody struggles with that aspect. Guarantors are no less. How do you deal with that part?
Thank you for that question. Restructuring is a bad word for lenders and credit providers. It should not be. Because I'll give you some context on my statements that will come through. Malaysia, as you know, we talked about 40% of GDP, bond market, corporate bond market, non-sovereign, right? 15% of GDP, which is fairly large, project bonds for over 30 years. So you go to Malaysia, you see all the roads. We don't have blackouts, you don't, or brownouts, you have all the ports. Everything was funded via the capital market. Not a single bank loan was dispersed for those. Over 30 years and 15% of GDP, I can't give you the absolute dollar amount, but very large, right? One default that I know of. One road. It was a road to nowhere, so it wasn't supposed to be issued. I had been a rating analyst. But it doesn't mean things didn't go wrong. Right? When the toll road opened, the traffic is half from the consultant who gave you an aggressive study. But when things go wrong, you have a 30-year concession originally. Now we have up to 60-year concessions. You then are able to restructure your debt profile. You term out, you go longer, you do a bond swap, right? And I was a rating analyst, and I would have the investors call me, Hock, downgrade the bond now. I said, no, we don't listen to you, because they want the price to go down, so they have higher bargaining power with the issuer when they do the swap. And then the issuer calls me and says, we're fine, we'll recover. But we became the arbitrator. But ultimately, they all land and say, okay, let's redo the bond. We'll issue new interest rates at the prevailing rates. And the bond get restructured and everything goes well. So let me be very clear why I see this is very important. If you get to a default, right, the rating agency who tracks default data, or anybody who does this, whether a central bank or banks, will have to put a mark there for their PD calculations. So of 10, and you have 1, so that's 10% PD. So we are in emerging markets. We don't have 2,000 project roads, we don't have. So 1 out of 2,000 is easy to, but if you only have 10 roads, and 1 has a default because of a technicality, right? You have 10% default for that asset class. And then when you study this, I used to do the default studies in the rating agency. When you do this, you start accumulating the cohorts. It's like a tattoo into the default study. It doesn't go away until you dilute it with new roads, another new 10 roads, another 10 roads, maybe another 100 roads that do not default, to get rid of this 10%. Or not get rid, to dilute the 10% to a 1%, making the asset class acceptable. Of course, banks do this very well because they look at the loss given default. So fine, I may have a 10% PD, and then I have recovery, whether I take the cash or collateral or whatever. Then I say my expected loss is fine. But in the capital market side, when you study these things, a lot of people are very sensitive to PDs.
Yep.
And then when you look at, what do you price a 10% PD with, and then recoveries take 2-3 years and sometimes forever. So you easily ignore the LGD part, and then you're looking at the credit spread against sovereign PIBs of some unimaginable number because you're looking at a 10% loss. But in reality, you're not looking at that asset class. So we need to build the asset class to be very safe, and then we need to build a measurement tool to this. So coming back to why restructuring is important, you do your restructuring before the D happens. Which is why over 30 years, we've only had 1 road in Malaysia that has defaulted. So we can take, that 1 over, we have probably 50 roads. So you have 2% PD, but very, very high recovery, almost 100% recovery. So that is the importance. Lastly, I know we're taking a lot of time already. There's another panel to follow. I would suggest we've done for corporate debt in Malaysia 2 rounds of corporate debt restructuring committee. These were, I think, anchored against is an initiative of the central bank. So you have a deputy governor sitting there, you have some independent members, you also have an executive director of the SEC on the committee that will accept debt restructuring requests, voluntary requests, on a very structured way. And then when a request to the committee comes, all lenders sign a standstill for 6 months, voluntarily, to work out a restructuring. And then some consultants are brought in, because when you have multiple creditors, this is where the problem starts. People holding out, senior lenders say, I am secured, you are going to get 0, I'm going to be 100%. And what you have is crash and burn. This was the 97-98 crisis. We did not sign up to IMF, and we saved ourselves in that way. Part of this mechanism was the CDRC, Corporate Debt Restructuring Committee. We don't have to do it for corporates. We should do it for projects. We should consider doing it for infra, green bonds. Again, to protect that asset class so that we're able. And then bankers know that when a report about a restructuring is seen by a deputy governor, or bondholders know that when a report on the restructuring progress is seen by the executive director at SEP, they tend to come to agreement on a restructuring on a voluntary basis. But after 6 months or a year, if you extend it and everything cannot be agreed upon, then you go through the courts, right? And you enforce whatever rights you have, and you. So what I'm proposing, and this has been done in Malaysia before, is have that intermediary step. So we don't have to have all the PDs and all that triggered, but we give it a chance for sanity to prevail when things do not go right, right? And then sometimes succeed, sometimes we don't, right? But there are frauds and all that, right? But those go through the normal legal process after a fair chance is what I'm saying. Hopefully that's been helpful.
No, thank you very much. I think my key takeaways are create the safety in the asset class, and then deal with defaults well before the actual default, however that can be done, because I think that lends to the safety, and that in itself should bring in the investors to those kind of bonds.
Grandma's money.
Grandma's money. And I think credit goes that the Malaysia's market is $400 billion worth of bonds, so it's not small, and they're really looking at everything from 10-year tenor to 30-year tenor, and that's fundamentally how the country's infrastructure has actually been financed. So a lot of learnings here. Thank you very much, Hock, for making the trip down. Always a pleasure to have you here. Thank you so much.
Thank you for having me. Thank you.
Thank you, Hock. Thank you, Maheen. We now take a small tea break. Let's rejoin in 15 minutes. Please help yourself with the tea. Thank you.
ऑन करके लगाना है। एड गेयर किड़ा है मैंने आज नींदर फुल चढ़ी हुई है यार अल्लाह ने। एड गेयर किड़ा है ये नहीं है ये एड गेयर 6 नंबर ठीक है अनम्यूट करके लगाना है।
Hello, ladies and gentlemen. We'll resume shortly. I request everyone to settle down, please. Thank you. We're ready to resume, ladies and gentlemen. I'd request you to please settle down so that we can move towards the next segment. Hello? Hello? It's not working. Hello? Welcome back, everyone. We now move to a high impact panel discussion titled Creating a Green Financing Ecosystem, Integrating Credit Enhancements and Financial Instruments. I'd like to request our panelists, please join me in welcoming our esteemed panelist, Ms. Claudine Lim, Director, InfraZamin Board. Ms. Khalda Habib, Executive Director, Securities Exchange Commission, Pakistan. Mr. Rizwan Ahmed, GM and Chief Executive Officer, Saudi Park Industrial and Agricultural Investment Company Limited. And finally, Mr. Imtiaz Gadar, CEO, Al Mizan Investment Management Limited. The discussion will be moderated by me. Hi, everyone. So I'll start with Claudine. Hi, Claudine. So we're all interested in building effective green financing ecosystems, right? Based on your experience with Infraco Asia and PIDG, what do you think are the keys to green finance success, and how do guarantees help?
Thanks, Nidal, and thank you for the invitation to be here. I'm very happy to be here. You heard from many of my learned colleagues who are very experienced, so bear with me if I repeat some of what they say, but I'll just share some of my personal experiences. I've been working with PIDG for more than 15 years, and as you've heard from my colleagues, PIDG offers a range of solutions that address different risks across an infrastructure project's life cycle. PIDG can invest as equity, bringing early stage capital to share risk with as co-investors with sponsors, or it can provide equity as growth capital. It provides credit solutions in terms of long-term debt financing and guarantee solutions for local currency credit enhancements, as we've heard from Garanco, and with country-specific credit enhancement facilities like InfraZamin. And also, quite importantly, we also provide grant solutions through the technical assistance facilities. So with this, we're able to work with players across the finance ecosystem, whether it's working with one solution or a combination of more than one solution. And I think key success factors, and you've heard this word a lot this morning, is taking a very collaborative approach and being quite flexible in finding the right solution and the right structure that works for a transaction, because there's no one size fits all.
Agreed.
So I think that's very much an important part of how we work, is to be innovative and try and show leadership in how a transaction can be structured. A very important success factor, of course, is a supportive regulatory environment. It's very important to have clear, consistent, and transparent regulations and guidelines. And beyond that, beyond a regulator that regulates, I think what is ideal is to have a regulator that is proactive in promoting climate finance. Even if the ecosystem is still quite nascent and all the pieces may not be there, it's about having a regulator that is open to dialogue and open to feedback and to working with all the stakeholders to find a solution. I think we have seen that with SECP, and I'm not saying that just because you're all in the room. I genuinely have seen that I was part of the working group that helped set up InfraZamin, and the dialogue and the support that we had from SECP has been really very instrumental, and having that open-mindedness in how to promote climate financing in events such as this is very important. I think another thing that you've heard about is having credible and robust climate metrics and a reporting system. So you avoid the accusation of greenwashing, and you really show the impact of green financing. And I think that's very important, and that's something that PIDG and InfraZamin works very closely with issuers and borrowers to achieve. And then more generally, governance and good standards and practices. It's all about risk management, and that's very much a critical success factor. And maybe just one final point is it's important to have project sponsors and developers who are forward-looking and willing to take on climate finance, especially in a new ecosystem, and financing partners. So I think having a champion that we can work with and show the way, and once you do one transaction successfully, it will lead to others, and others will come forward and want to take it up. So those are just some of my thoughts.
Thank you, Claudine. Very useful thoughts. Ms. Khalda, following up on how Claudine explained on the SECP or the regulator's role. So the question, or what we'd like to learn from you, is what is SECP's current approach in supporting green financing in Pakistan?
I think I would first thanks to Claudine that she recognized the SECP's efforts that we have so far done. Most of the things have already been covered in the earlier discussions, points raised by Maheen, Akif, Saeed. What SECP is doing, I think I'll just reiterate what has been done and what we are doing in more structured forms. SECP is always being a very proactive regulator in developing this green financing ecosystem. We always say that our approach is that the sustainable investments are encouraged, the climate-related risks are managed, and the market participants are guided towards environmentally responsible practices. We always promote green financing ecosystem through our various tailor-made policy interventions, which are obviously made keeping in view the country's development priorities, the development of our financial markets, and the climate vulnerabilities that Pakistan is facing. To start with, I think in 2021 we start this green finance ecosystem development through the launch of our green bond guidelines. Basically, through these guidelines, we define what the green projects are and what should be the disclosure requirements to determine the use of the proceeds of the green bonds. So far as Mr. Philip mentioned, 2 green bonds have been launched in Pakistan's market. Recent one was the Parvaz Financial's green bond, 3 billion bond, 3-year tenure, and mostly taken up by the financial institutions. Moving on, in last year, June, we issued ESG guidelines. Basically, this is on a voluntary basis applicable for the listed companies to disclose their climate-related risk and practices. Most of the parameters are covered as per the international requirements, and leading to that, we have developed the ESG Sustain portal launched in December last for companies to showcase what they have achieved in the ESG ecosystem. So for more than 50 listed companies, they have started reporting their ESG disclosure through this portal too. Moving on, we worked on to notify climate-related financial disclosures in the form of ISSB, IFRS, S1 and S2, which are related to the general disclosure related to sustainability and the specific climate-related disclosures. What we have notified, I think we are quite pioneer in this area because most of the jurisdictions are yet to move on to this path. And what we have notified that this would be applicable in a phased manner on the listed companies and then towards all the licensed entities, public interest entities. From the reporting period starting from July 1st, 2025, leading to the entire segment will be covered from the reporting period starting from July 1st, 2027. So this phasing is in the form of that we have selected 2 thresholds given to the listed companies based on their turnover, their asset base, and the number of employees. And to have the certification, the auditor will be giving assurance from the second year of this implementation of this standards adoption by Pakistan. I think moving on, I think the recent initiative is the SECP's review along with the Central Bank of Pakistan on the green taxonomies. We are working with the State Bank and other stakeholders on adoption and finalization of this taxonomy. And this timeline has been fixed something around June this year, when this taxonomy will be finalized by all the stakeholders. And moving on, we might be reviewing and revising our ESG guideline as well. So these are the areas where SECP is working on. And beside the awareness raising, including one such event, where I think not only the issuers and investors both need to be made aware of what the green possibilities, options, investment options are available in our markets, and how they can minimize or de-risk the green initiatives to ultimately invest in this market, building on the trust of the investors. So I think going forward, we might consider expanding the product range in the green ecosystem in the form of green scoop, green PE funds, and the green instrument like green indices or the PSX as mentioned by the Sabsawari sir. So overall, SECP's policy is the development of the market, awareness raising, and aligning our market in line with international standards.
Thank you, Ms. Khalda. Truly encouraging and lovely to hear that SECP is taking a proactive approach with this one. Moving on to Rizwan Saab. So thank you for being with us today. So Saudi Park recently partnered up with InfraZamin on a landmark 11.5 years tenured transaction for a solar distributed project. It's one of the longest in the recent times, distributed solar, private sector. So what made this transaction viable from your perspective? And how did the credit enhancement support made you take that view?
First of all, I would like to thank InfraZamin, SECP, PSX for having me over here, and very honored to become a part of that auspicious panel. Saudi Park is being one of the oldest development financial institution in the country, has been working into infrastructure projects, but I think we adopted the theory of change recently in 2022-23, where we actually resolve to basically work on initiative which support not only the development objectives of the country, but also impact the masses. And I think this is the core objective and the core theme that we are working on right now. And I think InfraZamin is basically a blessing, to be honest, because we as bankers have been stuck into conventional banking since ages, and we still working in the same way. We think the security is the property or the personal guarantees are the key to basically unlock the credit. But to be honest, unlocking a credit is all about ring fencing the cash flows, and I think this is what InfraZamin and Saudi Park together resolve and have been working on. To be honest, I think not only the security bottleneck that we have crossed because of the guarantee that InfraZamin has provided, but most importantly, I think this is very important. When we talk about infrastructures, it is not 6 months, it's not 3 years, it's 5 years. It has to be longer term. And unfortunately, the banks in Pakistan are very comfortable with the short term and they're not willing to go on the long term. But we took that leap and we took that step because of the confidence that has been given by the guarantee, number one. Number two, we took a longer step, and I would always say these things to the regulators and the market makers and the stakeholders. For a financial institution to secure long-term funding is also a very key thing to have. Really, I will be able or DFI would be able to expand and extend credit of a longer term if they basically have the avenue of getting longer term financing as well. So I think this is just a beginning for the market, and to be honest, we are the financial market in the country is in the process of understanding the importance of risk appetite, which is being given or provided by InfraZamin by way of their guarantee. But this is the only way forward, because the banks has already filled their appetites, number one, and their credit capacity is also limited. The only way to move ahead is basically join hand with the partners like InfraZamin and others and expand your capacity, number one. Number two, and I think we also have to come out of that shell. One thing which I would like to emphasize, and Farooq also highlighted this, the capital markets role. I personally believe, I've been in the banking sector since last 20-25 years, but I personally believe the only way to unlock this green economy is capital markets, because until and unless we do not explore new avenues of liquidity, we will not be able to create scale out of it. The commercial banks has their mood swings and their so I think I've been talking to InfraZamin and other stakeholders that Saudi Park would be the first partner to join hand and basically bring something for the capital market. And I would go one step ahead. Not only capital market, because even in the capital market, it's privately placed by the institutions. I would go a step further. I would ask about to launch a retail bond. So basically, a retail investor can also participate into these kind of listings. And Pakistan has experienced these kind of bonds. I remember I was part of one bond which was raised in 2007, I guess, and Standard Chartered was the advisor, and we did a bond for a Tamir microfinance bank, which is right now is a Telenor bank and now Easy Paisa digital bank. So the concept has been established and has been promoted and accepted well. So obviously, I think since morning I've been hearing such amazing initiative has been taken by multi institutional organizations, and the idea is to come together, design a plan, and move ahead. And I think that there's always a good time to move, because there's always not a right time to move ahead, but it is important to move ahead. That's what my.
Thank you, sir. We greatly appreciate the value and the partnership that we have, and looking forward to doing such similar transactions together. Imtiaz Saab. So building upon Rizwan Saab's comment on investors' appetite, right, and him speaking about retail instruments, what do you see as the investor appetite for green investment is like, and how can we expand upon it?
Bismillahirrahmanirrahim. Thank you so much, Nidal. I think very important and pertinent point, how do we build upon this? I think one of the key elements that we need to really work on is the awareness. Because I think, the first step to resolving a problem is accepting that there is a problem. And I think that acceptance on the mass level or the retail level is right now, quite frankly, missing. I mean, we have to realize that of all the issues that Pakistan faces, I guess climate and sustainability is one issue which is beyond our control. There are a lot of other things we can sort just by bending our ways. Climate is something that we are a victim of. Our own carbon emissions are much lower than the impact of climate that happens on us. But for that, at the retail level or for the mass level, there has to be a realization that there's a problem. Especially if we talk about the asset management, so there's a big difference between an asset management and a bank, right? As Rizwan Saab rightly pointed out, the mood swing of a bank can decide whether he wants to become green tomorrow morning, because that's how his business model is structured. The asset management, which is more retail-centric, the business model is structured as a complete pass-through. The retailer has to sign up. His mood has to swing that, okay, I'm willing to do a green investment, I'm willing to take that risk return, timing, exposure. So that awareness level, I think that's something that we really need to work on before we really see meaningful retail money coming into this business, because the awareness and the understanding is at this point missing. What do we do in the interim? I think we can continue doing what we're doing. One is incentivizing. Two is also creating deterrence. I think that's also very important, because as I said, a lot of the impact is passive on us. So we also have to make sure that a lot of things that we should not be doing are also stopped immediately. But in terms of incentive, I think people touched upon it, but we've seen in the past that if we can give a lower credit weight to a real estate sector for a certain time, and we feel that it's important, we can give higher per party limits. I think that's something that also needs to happen on the green financing side. So that first step is going to come from incentives. But if you ask me what's going to change it in the longer term, people need to realize that this is a problem. That's where the risk return profile changes. That okay, this is now return is important, but it's not the paramount thing. Right now, I think a couple of the speakers spoke about it. Return is paramount. If you can give me a good return, I don't care if it's green, black, or white. I'll invest in it. Otherwise, I also don't care if it's serving a noble purpose. But we've seen this market has appetite. If you look at our spending patterns, our charity patterns, even our Sharia compliant investment pattern, people have made that visible choice that okay, even if the sukuk is going to give me 1% less than PIB, I will invest because I believe or understand that concept. So I think we need to really educate people that this is also a concept we need to work on, because really our survival depends on it. So I think that is the number one missing element in creating the savings pool available for green investments.
Thank you, sir. So I'll have a follow-up question from you on this. In your view, how do you think credit enhancements can make Islamic and conventional green products more attractive to retail and institutional investors?
So again, as I said, what can we do in the interim? So credit enhancement is definitely, and I think a couple of InfraZamin speakers spoke about this. Like credit guarantees are not the longer term solution. They are the bridge to bring people across the line. That okay, initially, while you not believe or not understand why we are happening, we are giving you this additional comfort. So it's a great role that InfraZamin is playing, bridging that gap, or any other institution that gives credit guarantees. So yes, it's very important, so that it gives people the comfort that okay, you don't understand the broader perspective, let me give you some credit comfort, at least come in and understand and experience this. So again, I think that's very important, but we also have to keep an eye on that it cannot be the continued way, because then we'll never break the barrier. We'll always be stuck in that okay, if this is meeting my risk return investment, that's the only time I'll do green investments. What's changed globally is that people have realized that I want to do green investments even if it comes at a longer tenor, if it comes with a higher risk. So unless we cross that, I think we're not going to be able to achieve it. More importantly, in today's world, when it's becoming unfashionable globally to do green investments, right? So it's not as hot as it was maybe 12 months ago, especially with the kind of press that's coming out of the US. It becomes equally important that a country like Pakistan self-realizes and self-finances it.
Interesting. Thank you, sir, for sharing your thoughts. Ms. Khalid, I'll come back to you now. So collaboration is key, right? In your view, how can collaboration between SECP and credit enhancement providers help scale ESG-focused instruments in the local market?
Pakistan financial sector is facing significant challenges: limited green capital flows, perceived high risk, and underdeveloped credit markets. So there is a need of these credit enhancement tools and financial instruments that the regulator and the credit enhancement providers can work together. I think the topmost priority should be the awareness raising for the issuers, for the investors, for the underwriters, and the regulator too. One such incident is the activities that we are having today, and there is a lot of demand that we received even during the tea break, that these such sort of sessions for awareness raising of the industry stakeholder should be more frequently done. So I just talked with Maheen on this, that we will have a follow-up session on this event, and also in the form of workshop where we have interactive sessions, so that the ambiguities or the concerns that are in their minds, they can raise appropriately, the question should be raised. Beside this, I think what is needed and what this collaboration can work is obviously, as mentioned in the very effectively covered in the Maheen's presentation, this will enhance credit rating of the ESG instruments, because otherwise these instruments are either low rated or unrated. But once these are backed by the credit enhancement tools, then these are well rated, and this will be well accepted by the investors. So this would be the one area where this collaboration will be working. Another will be lowering the cost of raising the capital. As mentioned, that in the case of Kush bond, the cost was lowered for the investor, and this was well accepted because of this added benefit for this.
True.
So SECP as a regulator can provide the enabling environment, and the credit enhancement providers can de-risk, which not agreed by the WHOG, basically shift the credit risk to the credit guarantee providers. So we can both together develop this ecosystem for the launch and issuance of more and more credit instruments.
Thank you, Ms. Khalda. We look forward to continued collaborations.
Thank you.
Rizwan Saab, so the last question, I'll give the last question to you. So the question is, taking advantage of your first-hand experience running a DFI. As a DFI, what are some key challenges that you face when evaluating an impact-driven ESG project, basically? So, and in your view, what steps can be taken to basically, fill in those gaps?
I think very interesting question. How do I see DFI? I see DFIs, whenever I was part of banks, I used to see DFIs as sleeping lions and giants. So they have been sleeping since ages, and no new approach was the strategy. Sorry. But I think a great transformation has came in last 2-3 years, and all the DFIs has been headed by very competent professional people. Most importantly, we all of us, there are 8 DFIs working in the market, and we actually since last 2 years have been working together very closely. And most of the mandates has been secured and completed within DFIs. We don't have to go to commercial banks to close this. So yes, DFI as an entity, because of its scope, and most importantly because of its pedigree. The DFI has been sponsored by the Government of Pakistan in the respective countries. In the case of Saudi Park, the 50% shareholder is Government of Pakistan, the 50% shareholder is Government of Saudi Arabia, and they basically have defined an objective which revolves around impacting the masses and introducing innovative financial intervention in the market, basically from the development perspective. So yes, I think I feel a lot can be done from the DFI platform and the balance sheet, and I think thanks to the SECP and State Bank and other market participants, I think DFI has been playing a very progressive role since last 2 years, and we basically definitely we're going to go further from here. And one of the core area that we also, other than the debt market, I think capital market is one of the core area that we have to work around. We're also, I think last time the Commissioner SECP highlighted the importance of DFI playing that capital market and equity market development role. And I think we are working to assume that strategy. So basically we can also start providing the equity listing and everything kind of advisory. So DFI has to be a complete product suite, and I think because and we not only bring the confidence and our resources into the initiative that we believe in, but also we also like an enabler, because if we did one transaction last year about Acumen, which is 11.5 years, I know almost 10 other financial institutions started to run after Maheen to grab new deals. So basically this is somebody has to take the first step, number one. Number two, I think green is a huge subject. It's basically is not limited to renewable energy. We recently have given a loan to electric vehicles who basically for the intra-city transportation, and I think this is the first ever move that Saudi Park has done, and after this a lot of basically banks are now after these kind of structures. Green tourism is also one important area, and I think this is also infrastructure work. Saudi Park has basically tested this model last year in partnership with Awari, and we created express motels across the northern areas of Pakistan and across the motorways. So the idea is that DFIs has the appetite to basically test new things and basically work closely with the stakeholders and the regulators to develop the market. We are the enablers, and we are the one who basically have the responsibility, honestly speaking, to translate our efforts into something which can benefit the country and the economy. So this is what our role is.
Thank you very much. Really appreciate it. And this concludes our panel discussion. I'd like to thank all the panelists here. And we can move on to our next session then. Thank you very much. Moving on, I'd like to invite Mr. Waqas Hasan, Chief Executive Officer of Karandaaz Pakistan, to share his thoughts with us.
Bismillah ar-Rahman ar-Rahim. Ms. Jo Moir, Development Director, FCDO, Mr. Hock, Chairman, InfraZamin, SECP, distinguished guests and fellow colleagues from SECP, InfraZamin and PIDG. Assalamu alaikum and good afternoon. I am the second last speaker between now and the lunch. It's not a good place to be in. I'll try to be brief. I thank InfraZamin for inviting me to join you and speak on an issue that lies at the heart of our shared future. The role of debt capital markets in financing sustainable infrastructure and supporting green economic development cannot be overstated. In light of the existential challenge posed by climate change, climate action has become more about architecture, capabilities, and discipline. It is about how we mobilize capital, structure incentives, and align institutions to finance a low-carbon future. Pakistan ranks 110th out of 141 countries in infrastructure quality, but more importantly, 141st and 141 out of 174 on World Bank's Human Capital Index, which is really the sum total of all public and private effort and investment. I will not go more into figures as earlier discussions have highlighted Pakistan's climate challenge and the immense investment needs. Suffice it to say that it all demands full activation of private capital through innovative mechanisms like debt capital markets. It is always instructive to learn from those who are ahead of you on the trajectory. So my first point would be, let us ask ourselves, what has made green financing possible in countries that have succeeded in using debt capital markets to drive climate action? When we study successful models, whether in Europe, parts of South Asia, or emerging economies such as South Africa, we see a clear institutional architecture underpinning green finance efforts. At the foundation is the presence of national green taxonomies, which simply put are official classification systems that clearly define which projects and activities qualify as environmentally sustainable, thereby providing investors with confidence in ensuring that green finance truly supports genuine climate and environmental goals. The EU's sustainable finance taxonomy, for instance, has been a game changer. It allows both financial and non-financial companies to share a common definition of environmentally sustainable economic activities. In addition to taxonomies, strong regulatory frameworks require enhanced climate disclosures like the TCFD guidelines, which have been adopted or adapted by numerous countries. The second point that I would like to highlight is who has the scale and higher capability to take initiatives. State in Pakistan executes a sizable public sector development program and is otherwise largest spender in the Pakistani economy. Sovereign green bond issuances have played a catalytic role in setting benchmarks for private markets around the world. In our case, a paraphernalia of PPP authorities exists at the federal and provincial levels. In addition, the line ministries can develop and execute their own projects too. All we need is leadership and catalytic advisory capacity, which can create templates for raising green funds, channelized for a whole range of green assets such as clean transportation, renewable energy, air pollution, and climate change adaptation in the country. Colleagues, if I have to emphasize one point in my whole talk, it will be the importance of creation of capabilities for green project development and the cultivation of green assets themselves. Financing mechanisms, no matter how sophisticated, are only as effective as the pipeline of credible, bankable green projects they are meant to serve. Countries that have succeeded in scaling green debt have invested significantly in building capabilities around project preparation. As a country, we have made some modest effort. A start has been made. I'm sure it has been mentioned since morning that Pakistan issued its first $500 million green bond in May 21 to fund a hydroelectric project. It was definitely a milestone in the country's sustainable infrastructure effort. I would like to highlight here Karandaaz's own recent experience of successfully raising funds through first ever PKR denominated green bond of Pakistan. We showed a clear purpose, a credible pipeline, created templates, and efficiently project managed the fundraising effort. In the end, it was oversubscribed and participated by 9 financial institutions. We received great support from the SECP, and its green bond guidelines aligned with global standards such that those of International Climate Market Association ICMA was a source of comfort to the local investors as well as FCDO's Mobilist, from which we raised grant for this bond. Now I come to the third point. In the market development phase, we need to fully understand and avail of the offer of some of the concessional guarantee and capacity building facilities of the multilaterals, bilaterals, and specialized climate funds such as the GCF and the World Bank's Climate Investment Fund. These have been instrumental in de-risking green investments and crowding in private capital. Nidal from InfraZamin moderated an excellent panel which highlighted how credit enhancement can be used for green financing. We have recent example of first lot facility raised by Climate Ventures of the National Rural Support Program in Pakistan. We need to create more such facilities and link and tap into these internationally available resources as well as capacities. My final point is that if we scan successful examples globally, we would note that sustainable finance ecosystems are never accidental. They are built through deliberate policy choices, from creating specialized green bond indices to establishing national green banks or sustainability-focused funds that anchor early-stage projects. Countries that lead in green finance have understood that private sector participation flourishes only when public policy builds the runway. Influential and well-resourced institutions have to take initiative. I'll share a powerful case study in this regard from our neighbors. Hock, you mentioned that sibling rivalries. There are sometimes lessons to be learned from our rivalries or from our neighbors. I mean, if they're doing well. India's Infradebt Limited. 4 banks came together to form a non-bank financial company which focuses on refinancing operational infrastructure projects. With an initial equity of nearly 10 billion Indian rupees, it has an asset book of 178 billion Indian rupees now. Invested in 131 projects with 68 billion portfolio in renewable energy. The most outstanding feature is that nearly 157 billion, approximately 90% of the asset book, has been raised from 375 institutional investors, mostly in long-term category. It's about time that our major banks take inspiration, come together, and provide avenue for investment by mutual funds and insurance companies. Ladies and gentlemen, let me conclude with this thought. Green financing is not simply a financial innovation. It can be thought of as a profound reimagining of how economies grow. debt capital markets present Pakistan with a powerful opportunity to channel global liquidity towards our local transition needs. We will have to work collaboratively to address the challenges within our domestic landscape. I congratulate and thank Ms. Maheen Rahman and her team for holding this seminar. Your efforts for creation of awareness on green financing really deserve appreciation. Thank you very much.
Thank you, Mr. Waqas, for your encouraging remarks. We now invite the chief guest, Ms. Jo Moir, Development Director at the British High Commission Islamabad, to share her keynote.
Assalamu alaikum, good afternoon everyone, distinguished guests. It's a real pleasure to be here. It's an honour, in fact. You might be wondering what the UK is doing up on the stage here. So let me just go back a stage. For a long while, the UK as a development actor, for a long while we've seen the importance of innovative financial instruments and the capital markets in solving climate and development challenges. So I'm really pleased that we have PIDG here today, who have been a long-standing partner of the UK. And of course, we were a founding partner of Karandaaz here in Pakistan, and also InfraZamin. So really, really delighted to share the stage. SECP is also a current partner of ours. And Waqas, you spoke about building the runway to use of some of these instruments. And I have to say, I think Pakistan is really lucky to have the SECP as a fantastic institution that is doing just that. And I'd argue that partnerships like this, like the partnerships we see in this room today, are so important at this moment in time. You might have noticed that the international development and climate landscape is changing. That's an understatement, right? We have seen seismic changes over the last few months. Some might argue that these changes were always going to happen, that at some point development partners from the West would say, hang on, we need to think about development finance in a different way. But we have seen that moment come. The US has withdrawn pretty much from development and certainly from climate finance. And of course in Europe we're seeing cuts to development budgets across the piece, including from my own government. I'd argue that actually we need to take this as an opportunity to start thinking about doing development, solving climate challenges differently. That actually there is a huge role, and indeed as some of you have already spoken about, there is a huge appetite from private investors to engage with some of these challenges, to find the gold in solving some of these problems, literally the gold. So with that sense of urgency, there is a real need to look at how we deepen the capital markets. Today we're talking about the debt side of the capital markets, of course, but across the range of different financial instruments that there is a need to make these instruments available and usable in countries like Pakistan, who are facing some of the most urgent development and climate challenges. And I think we have some really, really good success stories from across the world to draw on. Debt instruments and credit enhancement mechanisms have been very successfully deployed to attract private sector development, private sector investment into sustainable development. Even in the UK, we have our own examples. Through the issuance of green bonds and use of credit enhancement mechanisms, we now have a thriving green finance ecosystem, and one which I know is ready to partner with other markets around the world. Our development finance institution, British International Investment, has also fantastic global experience of deepening capital markets in partner countries. It's really been at the forefront of some of these efforts. So a recent example is BII's joint financing of an $80 million utility to expand solar and battery storage projects across Southeast Asia. That's with Pentagreen Capital. And this investment is expected to unlock $300 million of additional private investment. I don't want to make it sound like this is a magic money tree. There is so much hard work that goes behind each of these transactions, but all to demonstrate that it really is possible. It is possible to mobilize private investment at scale for climate. Similarly, Garanco, part of PIDG, and it's fantastic to see Phil and Boo here today. Really great to have you here. Garanco has been offering partial credit guarantees to facilitate green bond issuances in several emerging markets, helping to reduce investment risks and enhance credit ratings, also attracting institutional capital. We have examples from other countries. Indonesia issued Asia's first sovereign green sukuk, which is an Islamic bond, as many of you will know, in 2018, and that's raised $1.25 billion for renewable energy. And I'm delighted that InfraZamin has been following suit here in Pakistan as well, with a sukuk recently issued, I think with Sunridge Foods. So there you go, pioneers in the room. Chile has issued over $7 billion worth of green and sustainability-linked bonds. And Nigeria has launched Africa's first sovereign green bond in 2017, again raising energy for renewable energy, raising funds, for renewable energy and afforestation. So this demonstrates that green financing is a proven strategy. It's not just an aspiration. And there's real potential here in Pakistan, isn't there? We know already from the examples that many of you have cited, there's appetite here, and there is the potential to invest in a way that effectively channels private and institutional investment into sustainable sectors. So while Pakistan's capital markets have a long way to go, shall we say, we've already seen some really, really encouraging stories, and it's fantastic that so many people in this room have been part of those stories. Just one fantastic example, 2021, WAPTA issued the first ever green Eurobond, successfully raising £500 million for hydropower projects. And then just last month, as Waqas mentioned, Pakistan issued the first 1 billion local currency denominated green bond here. That was Karandaaz and Pawar's Financial Services, with many of the partners again in this room. So it's clearly possible to do this here. Just a note on UK support in this area in Pakistan. So I've now been here for a little over 2.5 years. And I think most of my time has been spent on this question of how to mobilize more climate finance for Pakistan, particularly private climate finance. And in fact, we were part of the Climate Ventures project as well from NRSP. So it's a really, really central priority for us. Why? Because we think that not only is climate change an existential threat here, which of course not only threatens Pakistan, but ultimately because of the connectedness of our two countries threatens the UK. We need to act together, but also because there's so much potential for a UK-Pakistan partnership for growth. So we really, really want to double down in this area. And key areas that we are supporting at the moment are environmental and social governance standards, leveraging co-funding for the capital markets, catalysing capital market issuances, and also using specialist de-risking tools. We have a new programme some of you might have heard about, which is called SIFPAC, and that has a range of different tools, including a blended finance facility, technical assistance for project preparation, and work with government bodies to make the necessary reforms and build the runway. So please do talk to any of my team about SIFPAC and how to partner with us going forward. Just two final thoughts before I close. These are two key areas which we see as fundamental to improving the debt capital markets here. First of all, use of credit enhancement guarantees. I know some of you have already mentioned this. So We see these as some of the most promising tools for mobilizing green finance. By reducing the perceived risks of infrastructure projects, improving credit ratings, and broadening the investment base, guarantees really can unlock long-term private sector funding. And the second area I want to mention is regulatory frameworks. Again, this goes back to the question of building the runway. We know they are absolutely vital for the development of sustainable capital markets. We've seen that across the globe. And so we think here in Pakistan there needs to be clear and credible guidelines for green bond issuance, incentives for issuers and investors, and enhanced disclosure and reporting requirements. All of those areas will help build the investor confidence that we're really seeking. I'm sure that we will all work for this together, though. In the end, I hope that the ideas we've generated today will move ahead, but more importantly, that the partnerships forged today will move into the future and bring about new transactions, blended finance approaches that can be scaled, international partnerships that can be deepened. So once again, huge congratulations to InfraZamin for hosting this event with SECP, and many, many thanks for allowing us to join. Thank you.
Thank you, Ms. Moir. The UK's commitment to climate resilience in Pakistan is truly commendable. Before we move towards the final note of the day, there's a small survey that is circulated. I would really request everyone to take a minute and fill that in, please. And now, to conclude this impactful day, I would like to invite Ms. Amna Aziz, Director at the Securities and Exchange Commission of Pakistan. She also heads the Department of Lending and Private Fund. Ms. I'd love to hear from you. Thank you.
Can you hear me? Oh, sorry. Okay, Assalamu alaikum and good afternoon. I've got a bad throat, the allergies of Islamabad as usual. Waqas said that he was the second last speaker. I'm the only one standing between you and lunch. So I intend to be very brief and very crisp. First of all, thank you everyone. Ms. Moir, Ms. Maheen, our team at SECP, Ms. Claudine, Mr. Hock, and everyone that has basically contributed and participated and attended this session. It's basically gratifying to know that SECP as a regulator and a facilitator of the sector has played a role of a facilitator in providing this opportunity and enabling institutions like InfraZamin to operate in Pakistan and provide these pathways and runways, as Joe, you mentioned them as. So I just want to conclude this seminar. I'd like to thank once again all the participants. And through this rich exchange of global experiences, we have seen how innovative instruments such as green bonds, Sukuks, and blending finance can combine with credit enhancement mechanisms, transform green financing landscapes. More importantly, we've explored how these same strategies can be adopted for Pakistan and applied here to unlock private capital and reduce investment risks, build resilient financial ecosystem, and align them with the climate development priorities. The insights shared here today will undoubtedly play a crucial role in forming the direction of future policy reforms and driving much-needed market innovation, particularly as we strive to strengthen green financing through Pakistan's debt capital markets. As we navigate this important journey, it is our responsibility, whether as regulator, financial institutions, development partners, or investors, to carry on these discussions beyond this room. We must work together to transform ideas into practical, actionable outcomes that support sustainable growth and environmental resilience in Pakistan. Let this seminar mark not just the end of this session, but beginning of a stronger collaboration, knowledge sharing, and co-creation of solutions for a greener, more sustainable Pakistan. Thank you once again.
Thank you, Ms. Amna. As we conclude today's seminar on green financing via debt capital markets, I would like to take a moment to extend my heartfelt thanks to all those who made this meaningful conversation possible. A special thanks to our esteemed partners, the Securities and Exchange Commission of Pakistan, the British High Commission Islamabad, the Private Infrastructure Development Group, and the Pakistan Stock Exchange, and of course, Karandaaz Pakistan. We also are immensely grateful to all our keynote speakers and panelists. Thank you very much for making this possible. And at this point, I would like to invite all our distinguished speakers, panelists, and InfraZamin's team to join us on the stage for a group photo to commemorate this special occasion. Please, if you could join us.